Wednesday, February 7th, market analysis is Stan Ehrlich, and I'm not quite over that cold I caught on Monday, so I'm going to make this a little shorter than normal. Stock market indexes I always start out with, and the E-mini typically, and this is the March ES or E-mini futures contract. We are again in new historic high ground. This rally continues, but I keep warning you, and for good reasons, but it hasn't happened yet, that this is a dangerous situation and the market should start to pull back down again very quickly. But because of the amount of movement that we've seen for the last 4 days or so into new high ground, now I'm skeptical as to whether I'm going to get that retracement that I was looking for down to 48.41 approximately. So now I'm just looking for a minor downside correction. We'll see what happens. I'm not saying it has started. I'm saying it should be close and could be still this week, today or tomorrow. And I think early next week. Next chart is the spider, SPY. Now here we have a gap up situation this morning. These kinds of gaps are frequently exhaustion gaps and end a rally the day they occur, like today. But the gap could still be closed today if it goes down to yesterday's high. It may not be. And we'll see if we get some kind of island top or a downside retracement starting very, very soon. But I'm still, especially because this gapped up, and I think also the DIA may have, we'll see in a moment, gapped up. Gaps are almost always closed, so at a minimum, probably dipping down to yesterday's high, but that's not what I'm looking for. I'm looking for something a little bit better than that, and not necessarily now down to 480, but maybe down to 83, 85. Next chart is the 1 minute spider, and we've hit a little bump, stopping 4 times around the high of the day made earlier today and slipping a little. Oh, it sometimes is the beginning of something bigger on the downside, but so far that there's no evidence of that whatsoever. Strong. We're up 3 and 310. If I do get the market to break down and start to close the gap and continuing to work lower, in particular below 492, I would say, below yesterday's lows, then I'll be very optimistic about a more of a correction following through. Next chart. DIA did gap up just a little bit this morning. Not a very big gap, but it's there. Almost new historic highs, not quite, but getting close, very close. Now the move back down here would be about the same, maybe to 378, and I'm looking for possibly 371.20. Next, Russell 2000, not the same, opened higher, opened at its highs, dipping down to a little lower on the day, and obviously having, during the last month or two, not the same major bull move that the other indexes have had, and this is just lingering around a support area or just a little bit above for the last month and a half. Next, Qs, no gap, but new highs for the trend. Now, if this does turn down substantially, and in particular below yesterday's lows, then I'll be excited about a little bit more of a correction. Now, all of these, I'm looking just for a correction down to about 416 at a minimum, and probably a little bit lower than that, 409.10 I meant, on the QQQ. And lastly, the NASDAQ futures, March futures contract, probably a correction back down to 17,170, 180, and maybe back to a support area. Let's go to futures contracts. And a different perspective for the futures. All of these futures are continuation or perpetual contracts. They are extremely close to the exact same price as the actual nearby futures contract that people want to trade. They do represent how the market is moving, good signals that'll appear also in the actual futures contract, very, very highly likely. So I use them because they don't expire. I don't have to roll over. I don't lose my markings. I don't lose my trend lines. I don't lose a lot of things that happen when you roll over. New highs, looking for a correction. Next. Now, slightly out of order is the bonds, but they're just slightly lower on the day at the moment. And I'm, again, looking for a little bit more of a dip down to test 119. And I can't rule out a little lower, maybe a little below 18. Next is the NASDAQ. Like I said, excuse me, new high ground. But let's see at first, the first thing, does it close above previous highs? And it's still a little bit above those highs. If it doesn't, that's not really a legitimate breakout, in my opinion. New highs are nice, but you really want to stay up there above all the other highs. Otherwise, you're losing some sort of momentum and you're not having a closing price above a resistance level, which was broken, yes, but not on a closing basis. Okay, we'll see if we get my correction very soon. 10-year notes, down on the day slightly, nothing new, looking for a little bit more of a correction in a longer-term bull market. Crude, up slightly, coming out of support area, probably going to rally a little bit more. The trouble is the longer-term trend here is down, and it's just been going sideways for a long time. So, you know, rock in a hard spot. We might get up to 82 again, and I wouldn't be surprised if it dipped first to 68 again. But let's look for longer-term breakouts and or signals to justify actual trade that will maybe not work and maybe will work. Next, natural gas. Breaking out to the downside yesterday, and there is follow-through today. It did close below previous lows. So that looks to me like a legitimate breakout yesterday, and we get a little proof today that it's doing exactly what I thought it should do. Looking for lower levels and a challenge of 1.833 and probably even lower than that over time, next couple, 3 weeks. Heating oil. We had a bearish engulfing, got filled on the short side yesterday. We have not gotten stopped out yet. It is losing a little money. We have the stop at our yellow dot, which is 281.84. And we may get hit, we may not. We'll see what happens to this trade. But because of the sell signal that looks legitimate, it's not acting good today, but that's not necessarily meaning it's going to fail. Next chart, gold. Sideways, going into a sideways range here lately. Support below the market has been holding pretty decently, but broad double top. Second one was a fantastic bearish engulfing. Dropped for a week right away. Did good. Another good one about the highs. Green at the very bottom exactly. And again, red at the top and another one. Now this green is perfect. That green is perfect. This one is not. That was a bad signal. Green at the bottom. That's what you really want. There's green at the bottom for only 2 or 3 days, but still profitable potentials. No good. Red at the top, et cetera, et cetera, et cetera. So there's another green at the bottom down here. So that's what you really want. And of course, you don't know it's going to work great until after the fact. So you got to get in when you're supposed to. Right now, gold, neutral to a little bearish. Silver, neutral to bearish. Platinum, about to make new lows for a couple, 3 months. Bearish. And high-grade copper, about to hit some support again, getting close to oversold again. So we're probably close to a minor short-term bottom again. Next. Soybeans. Buy signal a couple of weeks ago didn't work. We're out a few days ago. That's that. And now we have probably another new low close to the trend. So you have to be bearish basically in grains overall. And I'm looking for lower levels now, probably down over the next couple of weeks or more to 1095. Next, bean oil just a couple of days ago made new lows for months and months, and then rallied a couple of days. Maybe it'll rally a little bit more, as I've said, possibly up to about 48 and a half. Not even liking that, probably less, 47 and a half, and then turn down again. The trend is down, obviously. The only support we've got left, frankly, is around 40.70. So bearish. Next meal, soybean meal, new low, almost a new low close. Not quite, and almost a new low, second or third lowest low at the moment. The trend line has now been broken. And if it closes here, it'll also be broken on a closing basis. So bearish. Looking for a test of a pretty good support area, 336, and very possibly lower after that. This is also a very broad double top in a resistance area. Could be long-term bearish. Corn, again, new low close, breaking a support level. Still have to continue to be bearish on corn and wheat. But now, after a few weeks, actually about a month, wheat has failed to follow through to the downside. Wheat has failed to make new lows on a longer term basis. It has started to go much more sideways since October. So I'm now looking at signs that maybe it is building a bottom of some significance. I can't come to that conclusion yet, but I was expecting and still have to think new lows could happen. So I'm neutral, waiting for something to develop here for a month that's gone sideways in about the exact same range. Cattle. New short sell signal on Monday didn't work. Tuesday, we're in and out the same day. Stopped out, lost a little. Today, the market's dropping down some, but the overbought condition coming up close to resistance, which it didn't quite reach. They always don't get into the resistance areas or support areas. They sometimes come pretty close. I would say, yeah, not even that close. But hey, overbought, dipping. Anytime I expect to see a good downside correction start, could have been yesterday. Can't come to that conclusion at the moment. We'll see. Waiting. Next. Hogs did have a correction after overbought in resistance. And even though we're a little higher at the moment, we're almost at the low of the day, almost right where it opened, close to the low of the day. And the rally that we had today fizzled out so far. So I'm not going to be surprised to see again minor new lows, but a rock and a hard spot. So looking for 78-ish, and maybe if that's broken down to 73 and then even lower. Next, OJ, still having trouble at that old neckline. So we might be looking at a high right this moment. Can't tell. Haven't seen any evidence of starting to dip back down, but I do like the fact that it's at the same resistance line. Doesn't have to be flat, and it's overbought. So keep your eye on OJ for a dip. Next, cocoa, radically strong the last 3 days, 2 out of 3 anyway. Very, very likely to be turning down any time now. This is a 92 on the RSI, and I think that's the highest RSI we have seen in probably a year or more. The odds of it turning down very, very soon are pretty damn strong, in my opinion. Next, coffee. Well, I'm trying to justify a head and shoulder top with the last shoulder having been made. So I really don't want any rally, which I didn't get until today, but it's not very much. It doesn't ruin the pattern. As long as it starts to go back down again almost immediately the next couple of days. I really, really, really don't want it to go sideways, and I don't want it especially to go up more. Next, sugar. Nice rally today, but back into resistance, and we're not overbought. So that's a little bit different situation. It's possible it could pop back up to the top of resistance at 25 and a third. But I think I better shut up and wait until I see what happens. Next, cotton to rag, like coffee, I think it was, cocoa, whatever. Super damn strong, very overbought. Not like 92, but at least 86 is high on the scale. Likely to turn down any old time now. And back to the E-mini, not really changing direction here. I'm thinking it's going to top out soon, but I'm wrong and then wrong and then wrong. I did get my correction. It wasn't as low as I expected, but it lasted a single day. And I didn't think that was going to happen. I thought it would last for a few days or a little bit more. So I'm waiting for E-mini, but I am expecting a downside reaction. And that's it, ladies and gentlemen. Thank you. Short today, still a little sick. Have a great trading day. Profitable trading to you.